for lack of a better word, is good. Read it right. Read works.
Hello everyone and welcome to episode 13 of Let's Play Wall Street Raider. I'm RakeM, your host. Last time out, we finally finished above $10 trillion. Of course, we've been hovering right around the 10 trillion mark for a while. I guess 2 or 3 episodes now. But we finally finished above it. We basically have been making money in the commodities, and our stock prices have not reflected those profits yet, primarily because the interest rate has climbed to 9.5%. And this rise in the interest rate is creating havoc on our commodity prices, which we would like to take advantage of, but we were wanting to keep the cash that we had in order to restructure our companies. But this price on wheat and corn is just too good to pass up. So we're going to push back the restructuring of our companies in order to take advantage of these two prices here. So what I've done in updating our spreadsheet is I have added 3 new columns to indicate who has what commodities, futures, and options. And we'll get to the options later, but right now on the futures, anybody that doesn't have wheat or corn and can afford to buy it, you want to buy physical commodities on those. Also, I have futures, and I've added myself to this spreadsheet now. I have futures on both wheat and corn that I'm losing money on, and I think what I want to do is I want to cover those or sell those off and then buy a new set, which will be at a lower price. But first we want to buy physical commodities, and basically anybody that doesn't have wheat or corn that has cash enough to buy it, and at this price it's going to cost somewhere around 150 billion, I think, maybe a little bit less. So starting with BP, he can buy corn, Cabot can buy wheat, Toyota can buy both, as can Dayton Hudson, GE. Goldcorp already has both, and then it's a question of who else has cash enough to buy one or both of them. And we're not really concerned about, actually not just concerned about cash, but cash and credit to buy both of them. So we're going to get started here. First, I'm going to go to BP. We're going to buy the physical commodities first. And BP can buy corn. Cabot can buy wheat. $122 billion. All right, so let's add corn to that. We're going to add the wheat. All right, let's go to Dayton Hudson next. Okay, the price has already jumped. The price has already jumped. Do I want to buy them at these prices? I think we'll go ahead and buy the wheat, but we'll stop buying the corn. It's too high. So let's buy just wheat. I guess he's getting low on cash and credit. Let's buy 25,000 units. All right, let's go over to GE. He's going to buy already got it. None of these guys can buy it. So that's all that I want to do. Like 180 billion to buy at 350. Let's see if Toyota has the money to do it. No, and he's got no credit either. Alright, so UTX maybe. No, he doesn't either. Possibly Baidu. Nope, not big enough. So I guess that's it. Unless it drops again. Alright, so what was I going to say? I was going to say that okay, so after looking at the various commodities, basically what's happening is the interest rate's going up. Now, typically, the silver price climbs when it goes up, and gold falls. But what's been happening is that they've been going up and down like crazy every month. And I'm not sure exactly why that is, but I don't expect it to stop doing that. It'll probably just continue on until the interest rate settles wherever it's going to settle. Now, the policy right now is neutral. So if we have a change in policy, you know, these are going to remain volatile for a while. Right? And oil, which went all the way down to like the $70 level, $60 level, is now heading back up. And we have BP that has shorted oil, so I want to have him cover the positions that he has before he starts losing money. So I'm going to close all of these out. So in episode 12, we went down this entire list and we took care of all the maintenance items on the companies that we had. We sold off the ones we didn't intend to keep. We picked up 3 new ones in bankruptcies that we need to look at today. But primarily what we're going to be doing here at the beginning is taking a look at our commodities and our options and our short sales. So before we get to options, let's briefly review where we are with our short sales. So I have shorted stocks in the that's the wrong thing. Here we go. In the securities brokers and software industries. And where we are now winning. We are now gaining basically half of what those stocks were worth. They've reduced in value. And so we've made $180 billion. And I don't think that we really stand much of a chance of doing much better than this. I think we might be able to make another 25 billion or so, but that's really not enough to continue to hang on to these. It's a risk to hang on to these. So I'm going to be covering all of my short positions, and then we're going to look at options, and we're going to basically get rid of some of those as well. All right, so what I'm going to do is I'm going to cover my short positions, and pretty much all of these we earned 50% on all of them. Dayton Hudson has lost money. That's mostly due to the commodities. And we just picked up another company in bankruptcy. So the other thing that I haven't talked about yet, when our interest rate went up again, is the index. With the interest rate going up, the index is going to drop. And what I want to do is I want to cover the insurance companies' index futures before we start to lose money on those as well. I'm going to cover these. I'll be right back. I'm also going to cover the ones that Nomura has. Okay, if this continues to go up, the index will drop and we'll buy more futures when the index bottoms out. Right, gold is down again. And pretty much all of our companies that have physical commodities have it. But we have Gold Corp with futures of it. So let's deal with our options next. The first one is Real Networks. I guess he's had these for a while, maybe since before we bought him. He's got 4% options on Neiman Marcus. There's no reason to hang on to those. I'm just going to sell those off. We made $18 million on that. Okay, Cabot has options on some oil companies, Exxon, and he also has Psy Systems, and he's losing money on Psy Systems. He's making money on this one and losing money on this one, I believe. So what we're going to do is we're just going to clear these out. Right, Gold Corp is way up thanks to commodity income. Right, and what was the other one? It was short. Okay, so we're going to buy those back. Taxable gain of $13 billion, which makes up for what we lost on the others. So that's it for him. Gold Corp just recently bought options on. Good, Cabot's up. He's down. He's hitting down from last quarter, but he's still making money. We had him buy options on BP and Dayton Hudson. He's making money on the ones for BP. He's losing money on the ones for Dayton Hudson. And the reason why Dayton Hudson is losing money is because he's got more money tied up in the physical commodities than he does anything else. And all of them are currently down. Maybe not wheat and corn now, but gold and silver are both down. What we want to do is we want to look and see whether or not BP is on the rise or falling, and if he's falling, we want to cover those or sell those off. So just what do we want to do? That's the question. So BP is scheduled to make more money. His income is supposedly going up. Demand's growing at 15%. We've got a fantastic return, but we've got a lot more money tied up in commodities than we do our business assets. So let's see how we're doing on these. Okay, so they're all headed up. all headed up. So we're going to hang on to those. Now let's go to Dayton Hudson. Again, he's got almost 10 times as much invested in commodities as he does his business assets. Got a huge loan, and he's trading for way less than his value. So we're going to hang on to this one too. Let's take a look at the industry. Again, huge return. We're just trading at less than our value. So on our physical commodities, we're making money on everything except gold. So there's no reason to sell this. We'll continue to hold on to it. And as soon as we cash out of these commodities, we should be just fine. All right, so I'm the one with futures on wheat and corn. Let me see how my futures are doing. We're making 360 billion so far. All right, well, that's good. Thank God we covered our oil. All right, so let's look at my options too. I have options on the insurance company, making money on this set, losing money on this set, and we're making a killing on our BP futures, or options, I mean. And this one we can cover. There's only 216 million more to make. So let's cover that one. All right, so I'm making another $500 billion over here. I owe another 100 billion in taxes, so let's pay that. And gold is now below $800 an ounce. I would love to buy more of it, but it costs like 400 billion to buy 50,000 contracts, and I don't think anybody's got that much. Our interest rate's falling, so the index has recovered some. And nobody's got it. Tokyo has a lot of cash. Let's pay off his loan. The question is, do we want to buy the index now? I'm dubious because the interest rate's so high. So I think what we want to do is just go over and look at our bankrupt companies that we inherited, and decide what we're going to do with those, and we'll just keep an eye on the commodities while we do so. So the big one is Time Warner Cable, or excuse me, Time Warner, and he's actually trading at a pretty good premium. He's got no debt, a 24% market share. He's offering to sell 35% of the stock of Warner Brothers that it owns. He doesn't own any stock of Warner Brothers. So obviously that is out of date. They're very capable. Let's see what our management settings are. Growing at a negative rate. We don't want to do that. So let's make our growth rate 8%, our R&D 6%, and let's give him a 1% dividend, because he's bringing money in. So we'll give him a 10-cent dividend. The industry is deteriorating, so we probably ought to look at freezing everybody. Okay. LG is in the securities industry, and we have Nomura there. And he's trading below his value, so let's just have Nomura buy him up. Alright, and next is Facebook, which is in the same industry with Baidu. And he's trading at a premium. Baidu is still growing at a huge rate, but the industry is still improving. Let's buy his assets and sell him off, because this is ridiculous. Okay, let's go to Baidu and just buy his assets and then sell Facebook. Just got Red Lobster. We don't want to sell for that huge discount. Let's see. Let's give 10% of Facebook to Time Warner and then sell it. Alright, wheat has gotten up to $10. And our interest rate has gone up again, and despite that, the index is still climbing. So we need to keep an eye on this. I think I'll go ahead and sell my futures on wheat, but we'll wait on the physical commodities until this tops out. I guess if this is going to keep going up, despite the interest rate, we should go ahead and buy some more index futures. So we have 3 insurance companies that can do that. So let's have Mitsui buy a few. Let's just buy 300. Tokyo, we've got plenty, so we're going to do as much as we can here. Alright, wheat's dropped to 971. Let's interrupt what we're doing and go take care of all the people that own wheat. So starting with BP. Always up, way up. Okay. Back to buying the index. Over to Tokyo. I don't know what we're going to find as far as counterparty goes for larger transactions, but we're going to get as much as we can. check real quick how he's doing cash wise. Alright, so we got plenty. Alright, so the index is going up because we just took profit on all those commodities, which is driving up the index. And if that's the case, then we've become large enough now that we can start manipulating the market and the index. So what we're going to end up doing is we're going to be rolling a lot of the cash that we've got into the bank and RakeM insurance, and we need to buy some bonds too, but we're going to start being able to manipulate the index at this point. So let's buy as much of the index as we can, and we'll run it up, and then we're going to do some things that'll cause it to drive to collapse basically, and we'll sell it short. But it'll probably be a few episodes before we get to that point. Let's go over to RakeM Insurance and have him buy some. Alright, corn is dropping. So before it drops any further, let's sell off all of our corn. Right, and gold has shot up, and generally when the interest rate is high, gold stays low. So I'm going to also sell those, everybody that has gold, sell that off as well. That'll get us out of the commodities almost completely. The only one we'll have to keep an eye on is silver, and we can go over to the bank and finish buying loans and freezing everybody. So we weren't able to get a lot of index futures. The number of counterparties that have cash to do that are just not that many, so we're only buying 250 contracts at a time. But what's going to happen here is all of the cash that we just got from the commodities is going to hit the books on the earnings reports for our companies as they come out, and it's going to drive up the index. But after that, the index should fall because they don't have additional income coming in, right? And the bank, because all that cash is out there, he's got 10 trillion nearly in cash. And the bank will start losing money if we don't do something with it. So what we need to do is we need to have the bank go back to buying loans, and we need to keep an eye on the price of silver, and when it tops out, we need to extract ourselves from the silver market. So I'm going to fast forward again while we buy and sell bank loans, and we should be able to buy up all the loans in here. We should have all the cash we need to buy up everything in here, but we're going to start from the bottom and move all the way up. We'll buy all the ones that are BB rated or lower, and when we get done with that, we'll see where we stand and decide whether we want to keep going. And I think we are going to keep going. It's just a matter of the runtime on our video here to see just where we stand as far as our timeline goes. We should have enough cash left over when we're done to start moving these stocks around. Now, whether we get to it today or not, I'm not sure. We'll see. All right, so I'm going to fast forward while we buy loans, and I'll come back if it's time to get out of the silver market. Okay, silver has dropped from above 23 down to below 23. So we're going to go ahead and cover our futures and physical silver, and I think Gold Corp actually has futures of it. I guess not. Thought somebody had futures of silver, maybe not. Wow, that really dropped. Now, before it drops any further, let's get all the way out of it. I think that's everybody. We'll go look at the who owns what list just to make sure. Yep, that's everybody. So the only thing we have futures of or commodities of any kind are the stock index. Which is probably a good thing because we want to buy all those loans and then freeze them. And if we're not having to divide our time, I can just fast forward at like 16x or something and get it out of the way. Because I'm sure that's kind of boring to watch. Alright, so wheat and corn are awful low though. I sure would like to buy those. But I'm not going to. We're just going to pass up that opportunity just for efficiency's sake and get this other stuff out of the way. And go back over to the bank. Have him buy up all these loans. I am going to fast forward at the maximum rate just so we can get them done. So if you see a blur on the screen, that's why. We're just going to get this finished and then freeze everybody and move on with our lives so that we can restructure, okay? So I'll be back in just a minute. Okay, I have finished buying all the bonds, or excuse me, all the loans. And basically what I did was I bought everyone's loan that was $1 billion or more. So the only ones that are left are all under $1 billion, all minor factors in their various industries. The only loan that I don't have is that's greater than that is the one for the computer player. At some point, if he becomes a problem, we can buy his loan, freeze him, call his loan in, whatever. But for right now, he's not really an issue. So that's where we stand, and we need to freeze everybody. But freezing everybody might have a harmful effect on the index. So while the interest rate is this high, I think it's better if we go ahead and buy bonds. So RakeM has some government long bonds, and they're now trading at around 81.50, right? And that's the long bond. The short bond, I don't know what it trades for. Right, that's too much. But what we're going to do, since he doesn't own any corporate bonds, is we're going to do a database search. Look at that. Nice, nice, nice. We're going to do a database search for corporate bonds. And we're going to buy up all the large chunks of bonds that we can that are under $80 per. And I'm going to do that for all of the bank and all the insurance companies, and probably me personally. All right, so I'm going to fast forward while I do this, and I'll be right back. All right, so all of our insurance companies and the bank have 15 corporate bonds, and with the interest rate now above 11%, we need to check and see what the government bonds are trading for. The long bond is now below $80, but the short bond is still above. So we're going to buy up some long bonds here, and the question is who we're going to have do it. Mitsubishi went into, or excuse me, Mitsui Marine and Fire went into debt buying corporate bonds, and matter of fact, he didn't get 15. He only got, I only bought 2, and so I think what I want to do is I want to buy the outstanding shares of him while he's still trading at net value. So let's make a tender offer on his stock. Let's offer 25% premium. All right, they've accepted. Let me give him $100 billion. Matter of fact, let's make it 200. And let's have him buy some long bonds. All right, now I'm going to contribute to him the largest of the bonds that I have, and then I'll go buy some more corporate bonds. Okay, that's all the ones he can hold. Now let me go buy some more. All right. Remember if Mitsui used up all of his cash or not. Okay, he did. So TMFI is going to buy some government bonds, the long bond. All right, he's used up his cash. Now let's go over to the bank. Oh, that was Tokyo. We need to go to RakeM Insurance. And he needs to buy about $500 billion. I think that's about enough. Nope. Let's do a few more. Alright, that's fine. Now let's have the bank buy some. Got $500 billion, but I really want to get another trillion on there. That's good. Now we have 11 trillion in cash between our various companies, and we need to figure out what to do with it. So we're going to be investing in some more commodities again, and we'll be selling short wheat and corn. I think silver was higher and is on the way down, so we might want to short it as well. And the question is who we want to do it. So let's see who has the cash, where the cash is, and let's also think about where we want to move things around. We're 45 or 46 minutes in now, and we've gone from 10 trillion all the way up to close to 30 trillion. And we're poised to restructure our companies. We have the cash to do that with, but the thing is that you know, we let's see, how do I put this? We've got a lot of companies with just tons of cash, okay, and it's going to be expensive to move them around. And we are running out of counterparties for our commodity trades. So I'm considering, rather than moving these companies around, is going ahead and looking at them from a standpoint of selling them off especially Gold Corp, Cabot, and BP. Okay, so we're going to be looking at those three with the possibility of selling them off entirely and just going with new companies instead. Okay, so when it comes to who's going to sell short wheat, corn, and silver, I don't want to use any of those three because I'm thinking about selling them off. And I also don't want to use any of the rest because we're going to be moving them around. It's going to make them more expensive. We still need to figure out what to do with this cash so that the bank knows how much to put into subprime mortgages. So what I'm going to do is I personally will do all of the commodity trades for the time being until we have our structure figured out and the cash spent. All right, so proceeding with first things first, I'm going to go ahead and sell short silver, wheat, and corn. When I get done with that, then we'll look at Gold Corp and BP. We'll look at whether or not it's time to sell our options and sell off their stocks. Before we do so, we will do an extraordinary dividend for most of the cash that they have on hand. We want them to become counterparties for our future commodity trades, but we don't want to leave them with trillions of dollars in cash. We want them to use their credit to conduct those kinds of trades. All right, so before I go into more explanation, let's just go ahead and fast forward while I sell short corn, wheat, and silver, and I'll tell you more about what my plan is when I come back. I didn't get the full number of contracts on silver because the price fell. It fell from whatever it was, 25 I think, down to 19 fairly quickly. I think I got about 15, maybe 20,000, maybe a little bit more. Corn, we didn't get the full amount either. And wheat fell pretty much while corn was falling. So we got what we could, and we got a fair amount, but not the full amount. But anyway, when it comes to dealing with these other companies that we're thinking about moving around or selling off or whatever, the things that we need to keep in mind are whether or not it's selling at a high premium and what its income is right now versus what it's going to be. Right, so if we sell this company off right now, that's $8.32 a share worth of income that will not get rolled up into the insurance company. So that's a reason why, that's a con. That's one reason why we shouldn't sell it. On the other hand, we're running out of counterparties for commodities trades, so selling it would create a counterparty that we could use to make a lot of money off of the commodities. So that's one of the things I love about this game, is that it makes you balance the various options that you have in front of you, and there's no end to it. Like, for instance, me buying commodities, I can make cash and it's not a problem, no big deal. I just take what I make and put it in the bank. But if I have a company do it, it affects his stock price. So if he does well, that counts as income, which goes on his balance sheet, and his stock price is affected by it. So potentially, every dollar that he makes on commodities could cause his stock price to rise $4 to $5, And so my profit is greater by having a company conduct these trades than it is if I do them myself. If you want to take that up another notch, make him a subsidiary of another company that I own. So now you have a company that's earning money off commodities, and then a company that's earning money off of the rise in stock price off of that company, which causes the parent's stock price to rise, and so I make a triple whammy. You know, it's just all that. It's that nesting factor that you have to keep constantly keep on top of. Now, the more loops, the more nested loops you have, the more difficult it is to manage, not only on paper but in your head, to constantly be reminded of who owns what, you know, and what the structure of your organization is. Well, I like to keep it simple for the most part, but we're going to run an experiment a few episodes down the road. We're going to try out Jerry's investment strategy that netted him quadrillions of dollars in just a few months. But anyway, getting back to our current situation, I don't really want to sell after looking at this. I don't really want to sell Goldcorp just yet, and I think it's going to be the same situation for these others because their income is just going up. So I think we want to wait. Which means that we're going to have cash in a lot of places that's costing the bank money. So what are we going to do in the meantime? Well, I think what we want to do is we want to have Bank of RakeM and the insurance companies take their excess cash and put it in subprime mortgages, or in the case of the bank, prime mortgages, until all of the earnings on our companies start to go down. And in the meantime, we're going to work our bankruptcies and make sure that we don't have monopolies anywhere as a result of those bankruptcies. All right, so with the time that we have left, the first thing we're going to do is go over to the insurance companies and have them invest all of their excess cash into subprime mortgages. So here, and by excess cash, I'm thinking I want to keep about $100 billion on hand and invest the rest. So we're going to put 1.2 trillion into subprime on him. Okay, and the next one is TMFI. Now he's got a value of, let's see, is that right? 13, no, okay. 13 trillion. And almost all of his value is tied up in Goldcorp. So what I want to do is I want to give him about $1 trillion of my money and have him put that in subprime. And that way, hopefully, his stock price won't crash quite so much when he sells off Goldcorp. The other option is I could just go ahead and sell off Tokyo Marine and Fire and take $13 trillion in cash off of that sale. I've only got a trillion invested in him. He's worth more than RakeM Insurance, mostly because of the premium. Again, that's a lot of income to give up. So I think what I'm going to do, I'm going to give him $1 trillion in cash. I'm going to do the same thing for Mitsui Marine and Fire here, except I'm going to give him $2 trillion. We're going to merge both of them into RakeM Insurance so that he gets a stock price boost from their respective incomes. And I think that's all we're going to do as far as moving stocks around for this episode. I want to give him $2 trillion. That would leave me with no cash. I'll just give both of them $1 trillion, and then we'll do the merger. sure I've paid all my taxes too. I've got no taxes due yet. Alright, so let's go to Mitsui, have him buy subprime. TMFI, have him buy subprime. Let's start with 900,000. 900 billion. Sure, he still has. Yep. He doesn't really need as much because he doesn't have any stocks yet. Alright, and now we will have RakeM Insurance merge with both of these. Alright, now RakeM Insurance is 24.5 trillion in stocks and not nearly enough anywhere else. Okay, so the bank is down to 8 trillion in cash. He's got 6 trillion in business loans. Well, I want to keep at least 600 to 750 billion in cash available for additional lending, but he doesn't ever get in trouble and try to sell off any of these bonds. So let's buy $7.75 trillion worth of mortgages. I'm going to buy prime mortgages. Put 6 trillion into prime, and let's put the rest in subprime. There we go. Now we need to figure out what we need to do with these. That is the next question. Actually, no, there's two other more important questions or issues that we need to address first. The first one is, we know that all these companies are on the rise because their income is going up. So we need to take as much advantage of the stock index rise as we can while it's still low. So let's have RakeM Insurance buy as many index futures as it can until we just cannot find counterparties anymore. That's the first thing we need to do. And the other thing is, we still haven't frozen the loans that we need to over at the bank. And given where we are in our runtime, I think that's what we'll end on, and then we'll start fresh in the next episode, watching all of these companies rise and rise and rise, and then we'll start disentangling ourselves and start, taking care of our structure. So I'm going to have RakeM Insurance buy all the index futures that it can handle, that the market will allow us to have. We're just going to get as many as we can, and I will fast forward and I'll be right back. Corn is all the way down to 369, so I'm going to sell off my futures. I'm also going to buy corn and wheat buy physical corn and wheat, and then we'll go back to buying the index. Okay, the price has gone up to where we're not getting a great price on the futures, so I'm going to stop there. Go back over to RakeM Insurance. We're down to getting like 140, 150 contracts per, and the index is up above 10,000 now. So I'm not sure that we want to keep buying and while this continues to go up. I think with the time that we have left, let's go over to the bank and start freezing all these loans, because it's going to take a while. And then we'll see where we are, and then decide if we want to do more of this episode. So what I intend to do is everybody with a C credit rating or worse, we're going to freeze them, and then we'll go through each of these industries that we have marked that need to be frozen, and we'll freeze everybody that's in those industries that obviously we don't control. Alright, so I'm just going to go through and freeze everybody with a C or D credit rating, and when I'm done I will be back. All right, everyone that has a C or triple C, I guess, or worse credit rating is now frozen. And wheat, corn, gold, and oil are all at a buying point. So I'm going to interrupt freezing loans to buy futures and physical commodities of all of those. Managed to get the full amount of wheat, corn, and oil, but not gold. It shot up a little too quickly. So let's go back to the bank, and we're going to freeze the loans of everybody in these industries. So starting with Toyota. We'll just freeze everybody on this list. Go through each of these industries, and I'll just repeat it. We'll just fast forward all at once. I'll keep an eye on the commodities. Hopefully we won't have to stop to do anything with those, and I think we'll end the episode at that point, so that we can come back next time and just go through and do the restructuring. All right, Cabot is up $1.09. We didn't quite make the estimate, the projection, but he's tripled up since last year. So all of our stocks are on the way up, and we were above 50 trillion a minute ago. We've slipped back to 47. Not that that's anything to be worried about. I think it's going to go up even further. The bank now has all the loans that it needs, and we've frozen all the ones that we needed to on our list. So I think we are done for today. When we come back next time, we're going to take Cabot and all the other companies that have excess cash, figure out what to do with that cash, whether it's to do extraordinary dividends or to roll it up into new investments, to park it into commodities, whatever the case may be. We'll figure all that out next time. The main thing is on Cabot, BP, and I think Dayton Hudson and Goldcorp. Those are going to be a little bit tricky because we have options on those, and we have to be careful about not devaluing our options. So we have to decide whether to sell the options first or just what order to do it in. All right, so we'll probably start with the subsidiaries of Cabot that are worth less than 100 billion each. Not sure how many of those there are. Let's take a look. Okay, so 1, 2, 3, 4, 5. So we've got 5 of them that we're going to deal with first, probably. And it's really going to depend on whether or not they're already at their sale price. Some of them may be, some not. But even if they aren't, we may go ahead, if we can at least double our money, we may go ahead and get rid of them and start over fresh. But anyway, I'll do my analysis in between the two episodes, and we'll come back with a plan. Thank you for joining me. I hope you enjoyed it. If you did, please like and share. That really helps me out. And until next time, this is RakeM saying, have a good one.